Adrian, thank you so much for joining us here at SuperReturn International, where you featured on a panel specifically in the AI Summit, a very specialised summit looking at AI and how data plays into all of that, particularly for you. And that single source question, talk to me about that and how important that is.
Yeah, so what we help our customers do, who in this context are GPs, is bring all of the legal entity data together in their fund structures, in their investment structures. Sometimes we go into the portfolio as well. And one of the exercises we do is we're centralizing all the data that's fragmented across usually a number of vendors. So you have fund admins or law firms that are managing these entities. You have different vendors on different funds. And so the data is highly fragmented. And we'll centralize it into our software such that GP, legal, tax, finance, IR, deal teams have a single source of truth that they can access information for KYC, for charts, for regulatory and compliance information. And why that's important is if you think about the investment life cycle, raising capital, deploying capital, and returning capital, all of those three phases all require entity structures to do that. Raising the capital, you're building fund structures. Deploying the capital, you have various types of SPVs and co-invests. And then returning capital, there's carry vehicles and all kinds of things like that. And so the entity structures that exist are sort of like scaffolding for all the capital that flows between the assets and the GPs and the LPs. And so if all of that data is fragmented and you don't own it and it's not all in one place, it's incredibly difficult to start to unlock AI opportunities, particularly in financial operations, things like bank account openings, wire transfers, treasury payments, and so on. If you don't have all that data in one place and you don't have pipelines to keep that data clean and accurate over time because it changes quite frequently.
So, that's an interesting thing. We talked so much about data for so many years and big data, but it's so important that there's authentic data because it's only got a value if it is authentic and useful.
Yep.
Tell me about that and what you're seeing in terms of companies' naivety to that, if you like.
Yeah, so what we see in the market is a lot of GPs coming to us, and there's a lot of, we need AI for now. We need AI for KYC. We need AI for deal charts. We need AI for SEC compliance or something like that. And what we're having to do is spend a lot of time educating GPs on this concept that I have of IA before AI, information architecture before artificial intelligence. And so really what we mean by that is, where is your data? How is the data being updated? What's the structure of it, right? Is it owned by a bunch of vendors and it's getting pasted together once a quarter sometimes over spreadsheets and email? Do we have APIs that are connecting into where that data is changing? And so we spend a lot of time doing that. And a really good example is director officer changes. So a lot of these GPs have thousands of entities in their structures, right, between the fund and the investment structures. All of those entities need to have a board of directors, need to have officers that can sign things and approve things, right? Those are all regulatory requirements. A lot of those people are employees of the manager. And they come and go, and people retire, and they change their names, and they die. They do the things that people do. And so we, one of the sort of data pipelines we have is we integrate into HRM systems like Workday. So we're listening. We have all the lists of all the appointments. We're listening to the status of those employee profiles. So the minute that somebody's employee profile changes in Workday, we've actually flagged that to legal in our system, and we've kicked off a process to update those entity records, remove people from director positions, replace them, and so on. And so that's an example of building the data pipelines between systems so you have that clean, accurate, verifiable data that you can then start running AI and agents against because you have a higher level of confidence in the quality of it.
And when you do have that IA before the AI, as you put it, what does that allow a company to do and how does it accelerate a business?
Yeah, so a really good example I think that will resonate with the investment professionals is KYC clearance. So you have a deal together, we're ready to close, and we have to, the structures that are going to be investing are going to, wire capital from, one country to another country. Well, the banks are going to want to KYC you on that transfer. They're going to want to know what entity is sending the money, who owns that entity, who controls that entity. And, they're going to want charts, structure charts, and so on. If it's fire drills and scavenger hunts to pull that together every time, then that can delay closing by 2 weeks, right? Where our customers are getting KYC clearance from banks in 2 days. So that's an example of how you can leverage accurate, centralized data with AI to accelerate deal timelines and time to close.
Obviously, AI is always top of the agenda at events like this. Taking that sort of data issue that you just talked about out of that, sort of what do you see as the opportunity for this industry now? Are we at a point where they're actually keeping up with the change that AI is going to bring?
Yeah, I think you have to segment, I think you have to segment out the functions. So, I think there's a huge amount of value, I think, being created in decision making around how to price deals, right? So, we've seen a lot of innovation around, how do we measure, we're paying forward for this company, on the basis of, revenue forecasts. How accurate do we think that revenue forecast is? How real is that? Can we back test it with AI against, the last 5 years of data? And there's amazing AI that's being deployed into that, right, to better, accurately forecast. I think in back office operations, all of that data is, fresh, clean data, and I think in a lot of deal making, the data can be a little messier because it's highly probabilistic, right? Like if we can measure, say, accuracy on revenue forecast to 90%, that's very helpful. This model's telling us that it's 90% likely they're going to hit these numbers, right? That's a degree of confidence that you can underwrite, and price on. You can't be 90% correct on what's the tax status of this structure. That's not helpful. You need to be 100% correct. So in the back office, we have a lot of more, what are called deterministic scenarios where it's either right or it's wrong, the answer. And it's harder to get value out of AI in deterministic scenarios because the data quality has to be so high. So that's where you have that IA before AI is more valuable, I think, in the back office than it is in the front office where investment decisions are being made.
So in your view, how will AI transform this industry going forward now if they do get that data question right?
Yeah. I think that the GP, like there's a significant amount of consolidation happening among GPs, right? There's a significant amount of GP M&A happening right now, and I think that there will be a significant pull ahead with the GPs that are able to deploy AI at scale. I think what we're seeing with our biggest GP customers is, again, on the back office operations, things like, how do we get instant co-invest SPVs, right? Like same day, right? We're not going to wait 8 weeks, right, for some fund admin to form it. We're just going to do it today. And how do we use technology for that? And how do we accelerate capital velocity? And that's in the back office. I think there's great applications of AI that we've talked about in the front office that can accelerate pricing and deal selection and stuff like that. And I think that the performance of those GPs that really figure out how do we increase velocity, how do we increase accuracy in our operations, I think the LPs are going to reward those GPs. And I think you're going to have, in 10 years, I think you're going to have, the 10 largest GPs will probably be 60 to 70% of the market.
And presumably some of them have already, have invested in that AI aspect for far longer already as well. They were ahead of the game, if you like.
Yeah, and I think there's certainly that. I think they're also getting, the bigger GPs are getting more attention from the infrastructure layer, right? So you're seeing OpenAI and Anthropic and Google and Amazon really investing in the bigger GPs' portfolios and in their operations because they have that scale. They can bring a significant amount of revenue to compute, storage, and inference, right? And so, I think that there is a bit of a flywheel of scale there. And you think about the amount of capital that, CapEx that's gone into AI infrastructure, right? That infrastructure layer has to show that they can return that capital quickly, right? I mean, you're nearly $1 trillion of CapEx in 2027 on AI infrastructure, right? And so they need scale fast, right? And so I think they're going to go to the larger GPs that can bring them that scale of revenue quickly.
So Adrian, there's 6,000 of the industry here. If they were to take away one message from having heard you speak on your panel, what would you hope it would be?
Yeah, that data sovereignty is critical to scale and to unlocking AI. And the industry has grown off of outsourcing as much as they can, particularly in the back office. And that's resulted in lack of ownership and sovereignty and fragmentation of your data. And it's critical that all that data starts to get brought back into the GP operations and ownership is established over that. And it's normalized in a way that unlocks AI and scale.
Great advice to end on. Thank you so much, Adrian. Great to have you in our studio.
Thanks for having me.